Good morning, everyone, and welcome to the European crossover webinar.
Stocks of aluminium up 4,000, copper down 2,275.
Bear with me when I cut this down. All right, everyone, and welcome to the European crossover webinar. And we have seen quite the turnaround in the euro dollar from what's happened over the last couple of weeks, where we've been just so quiet and not really having any movement whatsoever. And we've actually gotten above, like I said, key levels here. We did the analysis coming into the week. So as long as if we can get above 1034, that would stymie the bears. If we can get above 1053, we could, really start to move. And we did see a very nice rally yesterday. It actually started early and continued, but really, as I mentioned, had obviously a lot to do with the cash dollar index. We had actually, if you look at the close on Friday on the cash dollar index, appeared to be almost similar to like a gravestone doji, but we saw some continued follow through on that, and probably some of the concerns of an inability to foster a China deal by this month probably certainly did go on a drag on the dollar. But we've gone in, we're actually close to some key levels here on the cash dollar index. We did go past our initial support, which is 98, and then we had a secondary support of 97.79. The market didn't quite get there, just about got there, missed by a few pips or ticks, rallied up, but now we're starting to work a little bit lower. Obviously, the big mover for the day was the equities, and we're actually rebounding a little bit here on equities here. Coming here off of these lows. We were looking potentially for a move, an initial move after the market already broken down, to get down to around 3109 and then see a bounce. We came up short. I think we came up 3110 and a quarter or a half on the SPOOS futures. We rallied back, but after as we started into the new session, we actually went down to 09 and came down there and pull back. And from there went and rallied back here. I guess we can probably go with a 30-minute to make this a little bit clearer. So we're actually on our almost at highs, but we got to push a little bit higher here in the S&Ps. Moving back into the currencies, cable actually starting to move higher. We're actually just above that key pivot level, the key pivot level being 29.80. I thought we might be able to take that out, and we weren't able to yesterday, despite the cash dollar index selling off. And that was my thought. It was a little bit weird that with the cash dollar selling off, we still couldn't get above 29.80, but we're above it right now. So let's see what happens there. Peso just meandering, and dollar yen, we mentioned yesterday in the analysis or coming into the week, if we got a daily close below 927, because we closed the week above the pivot, that would open the door for 851. And we went sub 109, rallied back to about 920, and here we are at about 911 on the dollar yen. But certainly, like I said, I'm thinking we're going to get a little bit lower move here in the equities, and probably will allow the dollar yen now at this point to eventually work somewhat lower. Looking into the data for the day, we do have UK PMI coming out at the bottom of the hour, and then at the top of this next hour, we do have European producer prices. And let's see, New Zealand dairy prices will be out later on this morning. And as we come to the States, we have ISM New York Index at 9:45 Eastern, with business conditions also at the same time. And that's going to be it as we come into the States as far as data. And with that, let's just go on and move into some news. obviously one of the big movers not only has been the Aussie, which came off its lows, but boy, the Kiwi has really taken off. So Australia and New Zealand dollars hold gains as the RBA sounds optimistic. The Australian and New Zealand dollars held on to hefty gains on Tuesday after some surprisingly soft U.S. economic news upended their U.S. counterpart, and Australia's central bank put rates on hold for the next couple of months. The Aussie was enjoying the view of 68.42, having climbed 9/10 overnight for its largest one-day gain since mid-October. Chart resistance lies around 68.60, while major support is down at 67.55. The Kiwi dollar fared even better, touching a 4-month top at 65.11 after jumping 1.2% overnight. A break of resistance of 64.66 looked to have triggered a wave of short covering, with speculators having gotten heavily long of U.S. dollars in recent weeks. A rally began on Monday when the influential survey of U.S. manufacturing showed an unexpected slowdown in activity, one that left challenged the U.S. dollar standing as the economic outperformer. The Aussie got a further flip when the RBA closed out the year with rates on hold at 3/4, so removing the risk of an easing until the next policy meeting in early February. The central bank also stuck with its optimistic outlook for the economy, arguing that low rates was long boosting asset prices and incomes and would eventually feed through to more spending. That led investors to pare back the chance of a cut to February to around 48% from 60%. The overall tone of the RBA statement was arguably a bit more upbeat, so we would not be surprised to see some further strength above 68.50, said Robert Rennie from Westpac. However, we are forecasting 2 separate rate cuts next year, with the quantitative easing expected to begin in the second half of 2020. We would also argue that just above 68.50, the Aussie dollar is starting to look expensive on the basis of fair value models. For now, bonds surrender some of the recent gains, with the 3-year futures easing 6.6 to 99.25. The next hurdle will be figures on Australia's gross domestic product due on Wednesday, which are expected to show another middling rise of half a percent in the third quarter. That would nudge annual growth up to 1.7% from a decade low of 1.4, which, while still subpar, could be taken as a tentative sign of a turnaround. So let's go on and the euro holds gains versus the dollar, hit by trade tariffs and weak data. The euro and Japanese yen on Tuesday largely held gains made against the dollar this week after disappointing manufacturing data and signs of new fronts in the U.S. President Donald Trump's trade war rattled greenback investors. Moves in currency markets were broadly contained. However, with volatility remaining low and investors not appearing to take much fright at news of U.S. tariffs on imports of metals from Argentina and Brazil, and the threat of more tariffs on a range of European goods. As long as there's no game changer in the trade conflict, the market considers Trump's twitters of the nature to be background noise that can simply be ignored, Commerce Bank analyst said in a note. Look, one of the things that I was mentioning yesterday in the chat room was the fact that, he was groggling on about, Brazil and Argentina. And really the big deal was because Brazil had signed that big trade deal for soybean meal with China, which really leaves the American farmers kind of like, with their pockets empty, so to speak. And I'm thinking, hey, they're not going to make that kind of announcement unless if a deal was just going to be announced like in the next week or two. There's no deal coming this week. You must be smoking crack if you think that there's going to be a big deal coming this month. It's simply not even happening. So that's why the S&Ps came under so much pressure. I thought they would start to sell, but not like that. I mean, right from the get-go, we just came literally unglued right from the opening bell and kept pressing this thing lower. So there's no deal coming. The market knows that, and there's nothing on the horizon. My guess is we probably wouldn't even see a deal towards maybe the latter part of January, if that. So nonetheless, uncertainty has no doubt risen again. So what will happen in mid-December now that everything seems possible against the two opponents? They added, referring to a deadline when the U.S. is to apply more tariffs on Chinese imports. The euro has recovered from a 3-week low against the dollar. The yen also held most of its gains, a reversal from a 6-month low, plumb from Trump's tariffs announcements. The dollar last traded at 908 yen. Of more concern for the dollar's futures may be Monday's weak manufacturing reading for the U.S. economy. The U.S. Supply Institute for Supply Management said its index of national factory activity fell 0.2 to a below forecast of 48.1. Separate data showed construction spending fell in October as investment in private projects tumbled. The reading surprised economists who had recently raised U.S. growth forecasts for the fourth quarter. The weak data forced a lot of people to give up the dollar longs and cut losses, said Daiwa Securities FX Yuki Ishizuki. This may have run its course, but there's no reason to chase the dollar's upside from here. Trade frictions remains a lingering threat, which is not good for the market sentiment. The Australian dollar, which is sensitive to global growth outlook, given its large export dependence on China, hit 3-week highs after RBA's decision to keep interest rates on hold. So with that, we're going to move into the analysis. Yeah, bear with me. Okay, let's go and get started here with the euro. Okay, so the euro strung together a sustained upside move, closing above the 1074 level after Friday's minor reversal. Immediate upside potential for the week is going to be 1154, with immediate resistance at 1107. Support comes in at 1042. So we have the potential to get up to 1154 this week with this, and I said sustained upside, and that might seem a bit of hyperbole, but it's not, because when you think about how dead the euro has been and we haven't gone anywhere. Look at that. For the last 5 days, we were stuck in literally sometimes 20, 25 or 22 pip ranges. So Friday, you can see where we actually broke to new lows and then reversed. Now, we didn't close all that great, but we did close above 110. So when we got this added move, and the key thing for the euro, we've seen it before, but we got the move higher, but we actually held those gains. That was key. And we closed above 1074, which opens the door for a move potentially this week up to 1154. Immediate resistance will be 1107 with support at 1042. So we're keeping it pretty tight here. Bear with me. Update this. 1042 for support, 1107 for resistance. Now let's go move into cable. So it says cable retains the upside bid but despite the dollar's pullback on Monday, was not able to overtake resistance at the pivot, which is not 29.80. We are actually above the pivot, or slightly above the pivot at this point. So resistance is still going to be that pivot. Now we're above it right now, but that's the resistance. That huge. I mean, we've seen this countless times, but like I said, you can see the significance of 29.80. Yeah. If we can get above 29.80, first marker we're going to is 30.50, but until we get there and we can actually close above it. So it's 29.80 on the upside and the downside. Let's take a look at that. 29.80. For now, support's going to be 29.09 for intraday support. So the Aussie staged a convincing turnaround following Friday's close below 67.72. So it looked like the Aussie was going to be done for. You can see that poor closing on Friday. It looked like, okay, now we're going to extend it. And we just turned around things on Monday, and then we extended that move today with, what we saw the RBA held rates, and the thought is that they're also mentioning that they thought that with the lower rates we've seen that would contribute to some towards further growth. So that really turned things around here. So at this point now, okay, here with the Aussie. So I pointed out that the resistance is 68.42 with a daily close above that, opening a challenge to 69.14. Well, we're above that right now. So right now for today, we're going to say it's going to be 68.56. And we're right just above it, but that's resistance for a day, 68.56. But this thing is really starting to turn things around a bit. Looks like we may get some further follow through over the course of the next few days. But the move is, if we can close above 68.42, that will allow for a further move to challenge 69.14. Today's resistance is going to be 68.56. We're right at 58, so we're right there at resistance. Let's see if the market doesn't pare back a bit. Support is going to be 67.88. And I think we can do a bit better than that. It's going to be 68.08. 68.08. Obviously, with the move overnight, we'll end up having to move these levels a bit higher. And let's go and move into the Cuban. Okay, the Kiwi stormed higher from its recent lethargic range to close above 69.14. I don't know why I said 69.14, but to close above 64.93. That's what I meant to say. Open and move to, it's odd because, open and move to 65. Well, we're well above the 65 now. We're punching beyond that 65. So now we actually, like I said, we closed a good strong move on yesterday. And boy, that was a strong move. We were already starting to work a little bit higher. At least we were keeping a little bit of bid. I mean, it doesn't even seem like a little bit of a bid, but we were in such a tight range last week that when you pull this back, you say, okay, yeah, I can see where there was a little bit of a bid. You see what I'm saying? We were kind of holding there. And then we just took off like gangbusters yesterday, and we added further on to that gain. So now to put things into perspective as to where we're going. The next key challenge is actually 65.54, and that's going to be our resistance. 65.54. Boy, not used to seeing these kind of moves from the Aussie and the Kiwi. Holy smokes, what a change. Support now is going to be at 64.52. 64.52. When you look at how lethargic the Aussie and the Kiwi were last week, to see the moves that we just seen yesterday and then more follow through today, is just, wow. It looks like as if it's a much bigger move than it actually is, but still breaking on that range. It's still impressive. Moving on to the dollar CAD. The dollar CAD closed an 8-day high, reversing Friday's gravestone doji. Immediate resistance remains 33.36. A daily close above would open the door for 34.15. Support is 32.69. Well, this is a bit odd here that we're kind of giving back these gains a little bit here. Look at, here's Friday, and it looks like this market is, we actually, look, we took out the highs as far as these closes on Friday, and then we finish with the gravestone doji here. Looks like, okay, we're moving lower here to test lower. Then we turn around and we come back on Monday, and this was key because when you look here, look at the close here. This close took out the previous week's closes and a little bit more beyond that. See that? So I'm thinking, okay, we're going to add further, and we're just kind of sitting in the mud at this point. I would have thought, like maybe not as impressive as the Aussie or the Kiwi, but I would have thought we would have extended those gains really just to revisit 33.36. That's it. But if we can get a daily close above 33.36, that will open the door for 34.15. But resistance will be 33.36, and support is 32.69. Let's go move into the peso. So the dollar peso continues to be thwarted at resistance 1962. A daily close above 1962 opens a move to 1982. Support comes in at 1942. So you can see here we're just being kept at bay with this 1962 for now. That's going to be resistance, and support's going to remain the same as we had yesterday, 1942. So trading a little bit tighter range at this point. But you can see here on Friday we closed above the pivot, and certainly looked like we could move higher. Now that being said, we stuck to our guns as far as what's the next technical level, because with us closing above 927, the door was open for this market to move up to 1055, although it's been reluctant to go higher. We kept our, well, not kept our, but we put our resistance at 977. So we didn't give it too much room at all. And the market, the top was 19, looks like 972. Now we did go in and break lower, so the dollar yen sputtered above 1950 as the equities markets in the U.S. faltered at the opening bell as the likelihood of a U.S.-China deal has presumably faded as headlines from China signing a large soybean deal with Brazil left U.S. farmers empty-handed. At daily close, below the pivot opens a move to 851. Resistance is 950. And boy, like I said, you saw Trump over there working his thumbs, tweeting like nobody's business. And that basically, like I said, we got, the whole idea that there's not going to be any U.S.-China trade deal coming anytime soon, at least not this month. Really got the equities going lower from the get-go. And we quickly, well, not even quickly, I tell you what, you had the opportunity to go and step in and sell the dollar yen. Actually, I should have gone and sold it myself, but I had my hands pretty full with the S&Ps. But that was an easy move. I mean, honestly, I'm surprised people didn't take advantage, because when the S&P started coming under trouble right from the get-go, the dollar yen was still holding around the 950s. And I was a bit surprised that people didn't step in on that. I mean, I mentioned it in the chat room when I was mentioning about those articles, and one was explained about, there was a nice article that Reuters had done, but I was already stating is that it didn't look very good. But when that article came out, now you had something to sink your teeth into, and really left the door open for lower prices in equities. But even then, I thought they would, probably wait a little, but maybe saw a little bit of a rally, 5 handles or something before we rotated lower in the equities. And right from the get-go, we just started going off, and the dollar yen was still kind of holding around 950. So I'm surprised people didn't step in and take advantage of that. And we certainly did come under some trouble here. But the close below 927, the pivot opens door for a move to 851. So right now, equities trying to move a little bit higher, hold up in here. So resistance will be 950 at this point. Moment. And that's probably giving it too much credit at 950. I'm not so sure. I don't want to say it's a pivot, because we could easily just poke our heads above the pivot. On the downside, I'm going to stick with that 851. I'm not, like I said, because this thing could really, if we do start to see that slide, so I'm going to stick with 851 for the overall outlook. Let's go to the cash dollar index. Okay, the dollar index's gravestone doji close on Friday saw further follow through on Monday. Support will be 97.58 with a daily close below 97.79. Opening a downside move to 97.20. Resistance is 98.11. So it's going to be 97.58 on the downside. Upside 98.11. Okay, let's go move into the cross rates. So we've seen a further move here, and the QE, obviously, like I said, we've finally not only moved higher, got some further momentum. We had a resistance here at 71.05. Bear with me. And one thing is what we have managed to do is we've actually, at least for right now, we didn't close above it yesterday, but we are currently above it. That key level of 71.0, I've got it listed as 71.02. Right now, the market's pushing a little bit higher. Resistance, and we'll see because we've got some momentum behind it, although I think it may falter just ahead of this level. It's going to be 71.45 for resistance on the Kiwi yen. And support is going to be 70.65. Let's go and move on to the euro yen. Now, for yesterday's resistance, we did have that at 20.89. And we've kind of held our own right there. Not really held our own, but I mean, it kept the market a bit at bay. And we're going to go on and retain that resistance here at 20.89. And support we've got here is going to be 20.32. Which is from yesterday, so no changes here. Now, we did see a UK PMI coming in at 45.3, a little bit better than the Reuters poll of 44.5. Prior was 44.2, so a little bit better move here in UK CPI. Now, we're just a hair bit below the pivot. We're 29.75, and pivot obviously like it says 29.80. Let's go on and no changes here on the euro yen, so we'll move on to the euro odd. Well, we've seen this thing turn around, and we thought there was a chance it might start to turn around a bit, but boy, obviously a testament to the strength we've seen in the Aussie dollar. So we have gone and taken a nice little dip here, and potentially we can make a move back down here to 60.95. Support for today, let's see here. It's going to be 61.21. 61.21 for support. And on the upside, 62.04. 62.04 on the upside. You can see right there, 62.04 on the upside. And with that, let's go move into the Euro Kiwi. Well, we've seen this market move further lower here, and you can see where they're going for. That key level, 69.42. See right there. See right there. So that's going to be our bias chart support. Is 69.42. With resistance coming in at 70.31. 70.31, and you can see right there. So it's going to be 70.31 on resistance. And I'm not going to expect them to hit that today, but I mean on a rebound, that would be the resistance, 70.31. But boy, we've really fallen off here in the Euro Kiwi. After just sitting there and dawdling for some time, you can see we've really made the move lower here. We'll go and move into the ASEAN. Well, now finally the ASEAN's starting to wake up a bit. It's funny, now that equities turn lower, the ASEAN decides to go on and wake up a bit. Obviously, it has a lot to do also with the perception with interest rate outlook here. But it sure is odd to see that. Now that equities turn lower, the ASEAN turns higher. We're just above that 74.73, but I think they'll make a move. I think that potentially there's a move to 74.95. That's going to be the resistance. And support. Tell you what, we'll go right there. It's just going to be 74.22. So he's 74.22 for support. And you can see here with the guppy, we're still not able to go and take out that high. No changes in the guppy. You can see here the key resistance at this point is 41.82. You can see that level coming right across here, 41.82. And support will be 40.74. No changes here in the guppy. Let's go and move on to the sterling odd. Well, we have started to rotate a little bit lower, and finally, let's say we're seeing some strength in the Aussie, even though sterling pairs are finding a little bit of strength here. You can see where we're looking to go and make a move here. And that's going to be a bias chart support, which is going to be 88.42. And resistance is going to be 90.58. 90.58, which is that key level. And let's just go and move in now. Take a look at the other markets. We are seeing gold working a little bit higher here. We're at 1471 on the futures. And let's take a look here. Some resistance coming in right there at 1473. So you got potentially a move. We can stretch it about another $2 higher. Now that's on the D futures. Obviously, we're looking here on the spot. But you can see that we actually coincide right in here. So we can still move another couple of dollars here in gold. Let's see here. And to me, I think someone I saw, okay, yeah, that's right. Someone in the chat room was looking for a little bit of move higher. I was thinking they're looking for a little bit of a move lower. I'm thinking, well, wait a minute. It seems like we're kind of washed out because I know I haven't done anything with gold in a little while, but we spent some pretty decent time down here. So, yeah, I think we can move a little bit higher. Initial resistance comes in. Actually, a couple of dollars lower, but you can see here some good resistance. I'm talking about the spot coming in at 1472 on the spot. So about another $7 higher, potentially. On a very short-term basis for today, we'll run into a little bit of resistance, a couple of dollars higher, which in the D's futures translates to 1473. Crude oil seeing a little bit of a bounce here after that sell-off from yesterday, but you can see here this market, as we're looking at just barely playing possum, just kind of holding it. After we saw a pretty good sell-off, then the market kind of holds its own. You're thinking, okay, it's sold out. Now we'll start to take off and look, just little by little by little. Honestly, I guess I have to say from my own account, but I think people have gotten a little bit tired of the way this market is traded. Honestly, it had me where I talked about the frustrations is that, this market will run over on one side to close strong on the day, then the following day run over to close lower on the day, then the next day do the exact same thing again to the opposite side. And I think this, like I said, you can see here now, I mean, I guess maybe there's some movement, but look at that. It's just barely ticking above here. And I haven't done anything with it. It's still a good market, but until we're not doing that up and down stuff. Now, obviously, this had a lot to do with the option expiration. We did move a little bit higher, but we took a dip, and now we're quietly trying to move a little bit here. But, I mean, right now with volatility coming back, at least in the equities and other markets, better to trade. Like I said, the dollar yen, I'm surprised people didn't jump on that. Yesterday when we saw the equities coming apart, and the dollar yen was still trading at 850. So I was surprised that people didn't jump on that. I'm not sure why they didn't, but anyway, there we go. We'll see. We are seeing the equities start to actually dip a little bit here. Yeah, 31.16 in the futures. We made up to 31.21. We're kind of dipping back here. But that's all we have for today. Thanks for joining us here. We'll catch you on the FX Daily Roundup.